Good morning, everyone. Thank you for attending the 2020 FIT Virtual Educational Retreat. While this is technically our 14th year, this is our 13th conference, not counting that year that Hurricane Matthew decided to show up without an invitation. We are all saddened that we could not get together in person this year, but are hopeful that things will be back to normal for next year's conference. For anyone that has not ever met me, my name is Peter Heron Brown. I head Nonprofit Insurance Services, the program administrator for the Florida Insurance Trust. My team is responsible for everything from marketing FIT to insurance carriers, underwriting risks, claim advocacy, and loss control services, along many other services as well. Let's get the housekeeping out of the way first. You'll notice that on your viewing platform, there is a chat window close by. While the speakers are presenting, one of our team members, Justin Wiley, will be watching that chat for questions. At the end of each session, any questions will be answered and asked, so please don't be shy. Additionally, sprinkled in between the sessions will be drawings for prizes handled by our resident patriarch, Doug Childers Sr. If your name is called, Jennifer Lister will reach out to you early next week to coordinate delivery of your prize. We wish everyone the best of luck. We have a great lineup of speakers for you over the next 2 days. We hope that everyone finds these sessions informative and also entertaining. Our introduction is handled by none other than the chairman of FIT's board, Joe Anello. Joe is the president of United Community Options of South Florida. He has been with them for over 40 years and continues to be a great champion, not only for his organization and the population he serves, but for the Florida Insurance Trust as well. We thank him for his endless dedication to both duties and are glad that he is able to kick off our conference. Take it away, Joe.
Good morning. We, as Peter said, are in our 14th year of existence as Florida Insurance Trust and our 13th conference. And obviously, we hope everyone is staying safe in this unusual time. The big news this year, of course, is that we're virtual. But the more important news is that there's no casino night. But we do have, as Peter suggested, numerous raffles that we can participate in during the course of our 2 days. This year, we've had over 150 registrants for our virtual conference, which is just slightly under what we normally get in person. So we're very pleased with that. We're proud to have of what we've accomplished over the last 14 years as the Florida Insurance Trust, keeping our rates consistent and providing you with a complete insurance product. This year, we had in our renewals, which is May 31st of each year, 97% retainage of all of our members in the trust. And this has roughly been the same percentage every year since inception. We're real proud of that, and we take that as a sign that people like the trust and count on it. We also actually added new members this year to the trust, and we actually signed up more than 50% of everyone we quoted for insurance this year, which I think is a real testament to the fact that people recognize what we are and what we do for the nonprofit organizations in our community. We're at the point now where we can actually be somewhat selective in offering insurance to members. This, in fact, when we get to this point, since we're at this point, is that we all benefit by that, because if there's some organizations that have spotty records, that could really affect all of our rates. But we do try to work with them and bring them up to a standard that we're now holding, and so that we can write them eventually. I have a little excerpt of an article I came across recently about insurance I'd like to read to you. We spend so much of our time making plans for today, tomorrow, for that dream vacation we hope to take someday, for our children's future. But there's an old Yiddish saying, we plan, God laughs. Because while plans are all fine and well, life is a way of messing with them. And that's fine too, because there's a safety net. It's called insurance. That's there to catch us when plans go awry. So keep planning for the good stuff, but make sure you're covered when life doesn't go exactly as planned. You can see, I think that's pretty appropriate for this particular time in our history. So having said all of this, here's to having a great virtual education conference. And here's hopefully to meet again in person next year. And of course, most importantly, have a live casino night. So now I'm going to turn it over to Doug for our first raffle. Doug?
Thank you. Don't let the costume just confuse you. I'm not a robber at Mardi Gras. I should be referred to as the Dean of Green or the Oracle of Orlando. I was asked if I would handle the drawing. I said, sure, I'd be glad to do something. And said I'll just tell a few jokes and, a little bit of levity as we go along. Well, this morning, HR handed me down some rules, and I would like to read them to you real quick. No Biden jokes. Well, I kind of figured that. No Trump jokes. That goes along. No religious jokes. No feminine jokes. No age gender jokes. No wife jokes. And I actually had some wife jokes I was going to do, and I looked at them and I ran them by my wife day before yesterday. She hasn't spoken to me in 2 days. So apparently that didn't work very well either. So I kind of put everything together, and I assumed that the only two things that aren't off limits is lawyer jokes. I'm sorry, lawyers, but I guess that's the way the cookie crumbles. And Sumter County jokes. So I'll probably be gravitating between one or two of them during the course of events. But we want to welcome all of y'all. This is our 14th, and we're really excited about having everybody here. And it is so strange doing this online. So I'm going to give you a Sumter County joke, and then we're going to have a drawing. You might be from Sumter County if the Blue Book value of your truck goes up and down depending on how much cash you got in the tank. You might be a redneck if you own a home with wheels on it and several cars without. The first drawing is a winner, and I got a system for doing this. Took me a while to figure it out. I did it Sumter County style. I wrote everybody's name, and I put all the numbers in here, and I have the numbers over here. And Jennifer Lister is auditing me to make sure I get it done right. The first number is number 121, and that is Carol Gilmore, Director of Peace River Center for Personal Development. Thank you, and we'll be getting your money to you ASAP. And I look forward to seeing y'all at the next drawing. Thanks. And I turn it over to our illustrious leader.
Thanks, Doug. We can always count on you for some levity, of course. And congratulations to Carol with Peace River Center. So our first presenter is Shane Caldwell. Shane is the CEO of Ballator Insurance Group, the parent organization for the company I work for, Nonprofit Insurance Services. And on a personal note, he's our boss, but we love him anyway. Prior to creating Ballator and Nonprofit Insurance Services back in March of 2007, he served in various senior management positions with a nationally publicly traded broker. We always find this session to be of great importance and a wealth of information, and looking forward to what he's got to offer this year. So thank you all. Take it away, Shane.
Hi. Thanks, everybody, for attending. I'll echo everybody else's sentiment that we really wish we could be in person. We really enjoy the camaraderie, but we're going to do our best. And my job is to bring everybody up to speed on the state of the insurance market, as well as an update on what's happening with FIT. we are very excited that this is the 14th year. My issue is I try and come up with a new theme each year so that we don't do the same thing every single year. And I was really having a hard time because after 14, we've covered a lot of stuff. But ultimately, what I came up with was I was thinking, well, what's actually happening pertinent in the world? So obviously, you're going to hear a lot about the coronavirus and coverages and all of those types of things. But really, if you exclude Corona, which obviously we have never had that issue before, but if you look at all the stuff that has come from it, I was thinking back, this takes me back to our very first conference and as to why we actually started FIT. So the theme we came up with was have overcome and will overcome. And what that means is if you look at this year all by itself, obviously the coronavirus is terrible. We've never had that happen before. But I think everybody's heard that this is the third most active hurricane year in modern times. Well, the other two most active years, the number one and number two, were 2005 and 2006. And it's actually a result of why we started FIT in the first place. It was a hard insurance market. People couldn't buy insurance. And we came up with a way to provide insurance in a cost-effective manner, and most importantly, be consistent with it. If you also think back to 05, 06, the financial markets are in the tank, just like they are now. There was a whole lot of home foreclosures, which there are now. So if you really think about it, 2020 is not that unlike 2007. So with that, I'm going to try and get into about 15 minutes of the state of the market. It's a little bit dry because there's no way to make it exciting, but I'll try my best to at least explain it. I'm looking forward to getting to the second part, which I'll tell you about the status of FIT. Michelle, who put this together for me, did a great job of all throughout. There's some little fun facts, but this one, we were thinking back to what was happening in 2007, and Michelle did the research, and actually the first iPhone was released on June 29th, 2007, which it just so happens that it was actually on June 1st, 2007, when FIT wrote its first policy. So we thought we were doing something big, and then Steve Jobs comes back and one-ups us literally within 1 month. So getting on to the state of the insurance market, we really have to talk about this year in three kind of time frames, because there's the early market, which is January, February, and early March. Now, at that point, going into the year, when we meet with markets, everybody was indicating we were looking at 10, maybe 20% increases, which is hard to swallow. But there was capacity, although people were picky. And the reinsurance market, that's the insurance that insurance companies buy, was fairly stable. So it was, even though the pricing was going to be a little challenging, it was not that tough of a time. And then, of course, when you get to the next one, we're looking at from mid-March till April. This is when in the insurance world, everything just kind of blew up. We had the corona pandemic came out. And of course, now in retrospect, we kind of know what that means. But at first, from the financial world and the insurance world, it sounded like the whole world was coming to an end. Big time political pressure on property carriers to pay business income claims. And we'll talk about that a little later. The Florida Office of Insurance Regulation came out, as did many Office of Insurance regulations, and gave us some guidance. And the guidance was that first responders and healthcare workers were going to be covered under work comp for COVID. Other states have gone much further. Take California, for example. They went as far as the state came out and said COVID is going to be covered. So there's still pressure up in Tallahassee. Florida is a very business-friendly state, so we think it's going to stay the way it is, but nobody knows. But because of COVID, the reinsurance underwriting became a lot more restrictive on coverage, limits, and capacity. And almost everything in the insurance business, it kind of starts at the top and works its way down. And kind of at the higher level are the financial services and the reinsurance. So obviously, as the reinsurance went up and became unavailable, the pricing for insurance went up and got more unavailable. And then you kind of get to the most recent period leading up to now. Things still are unknown of what's going to happen with COVID. But the Lloyd's chairperson came out and said coronavirus could be the most expensive event in history, which would mean that it was a $50+ billion event. And he really said that because a lot of stuff ends up going back to London, and they're going to get hit with a lot of claims from all sorts of different coverages, where the domestic carriers tend to provide more limited type coverage. And yes, they got exposure, but probably won't get hit as wide. The rate increases, which just 3 months earlier, 20% hurt. Well, those quickly became 30%, which really, really hurt. All of a sudden, carriers started reducing limits that you could buy. And I'm sure, we all saw that at our renewal. And because there's this question of coverage, some policies already had communicable disease exclusions. Well, now almost universal, every carrier has actually came up with their own specific coronavirus exclusions on virtually every policy. Now on property, if you think of this circle, if you think of that as a stool with 5 legs, what all of us talk about the most and we feel is the top one is the pricing. So that's going up. But just as important for property coverage is the capacity, the coverages, the reinsurance cost, and the industry loss ratio. So all of those things come together. As a stool, if you start getting one of those legs out of kilter, obviously the stool gets a lot less unstable. If you pull 2 of them out, the stool's not going to stand up and it's going to fall down. And what we're trying to do and what our goal is to keep all 5 of those things firmly underneath our circle. And that's how we can control pricing and availability. Like one note on coverage, and I'm sure I covered this a little bit later on, but we fought really, really hard to keep our coverage form. We talk about this every year, but it's a proprietary coverage form that covers a lot of exposures that nobody else covers. So for instance, there are people that I know that are on this call that when the hurricanes came through, they lost locations that they didn't know they had. It wasn't on their schedule. Well, it just so happens we have coverage for miscellaneous unnamed locations. So they even got reimbursed for the locations that they didn't even know they had. And I could give you 3 or 4 other differences of coverage that are very important. A lot of our coverage comes out of London. We have to make several trips a year to go over there. And I could tell you, we spent an inordinate amount of time making sure we didn't give up the coverage and try and keep the pricing in line. And the easiest thing in the world to do would be to take more standard coverage and let the pricing moderate even some more. This line graph, it's pretty easy to read. If you look at it, it runs from September 17th to December of 19th. And this is just month by month what's happened with the aggregate property pricing. The trend is pretty obvious. Now, the information isn't out yet, but what would be super helpful is if we had 2020, because if you just imagine that line that ends on December 19th, you're going to start seeing that thing go up at about a 45-degree angle from the start of the year all the way through 2020. So it's not a very good trend as far as being buyer friendly for any kind of insurance customers. The next one, historically, property has not had development. So you have a loss, the adjuster works with you to peg the loss, and then you rebuild your building. As opposed to work comp that we know when a work comp claim happens, it's going to continue to increase over 4 or 5 years. But now all of a sudden, you'll notice these are the hurricanes from 3, 4, 5 years ago. And these are the developments. And this is essentially over a 2-year period. And if you'll notice, Irma actually went up 34% from in aggregate what all the adjusters thought the losses were going to be. And it's really something that's new over the past, say, 10 years, which is a demand surge. We now know that when you have a hurricane or any other kind of catastrophe, that our cost or the insurance carrier's cost are going to go up. It's even much, much worse when a whole region gets hit. So you can imagine what's happening in Louisiana, Mississippi, and even the panhandle of Florida, because the people that didn't have roofs, they're not going to get roofs for a very long time because there are not enough contractors. And I can assure you, there's not enough roofing tile. So then you're sitting there with the poor folks that have the blue tarps on them for literally a year. So this is something unusual in property. The carriers have started to factor that in, which is why you're seeing the pricing go up, because their exposures are actually going up. And now we have multi-years of experience to show them exactly how much. Okay, so some key takeaways from property. The real impact of COVID-19 looks like it's going to be on the business interruption. It's been tried in several jurisdiction courts at this point. There have been a few that sided with the insured, but the vast majority have sided with the insurance carrier, saying that you have to have physical damage for there to be business income. And a virus is not physical damage, and that's coming from the courts themselves. The hurricane activity over the last 3 years and claims development on Irma claims, I made that comment on the last one, which our insurance carriers now have a number to put to their initial assessment, and those numbers are going up, and therefore they're looking for their premiums to go up. The overall industry capacity is actually not bad. However, carriers are scaling back on deployed capacity. So even though the coverage is there, they're pricing it at a point that nobody's going to buy it. Coverage restrictions are obviously impacting certain areas of BI. Certain of our classes have big BI exposures. Certain of them do not. The ones that have big BI exposures, we need to be able to provide that business interruption coverage. But because it hasn't completely played itself through the court system yet, nobody knows what that's worth. So a lot of the insurance carriers are just excluding or not providing business interruption until the courts clear out some. We're still seeing rate increases for cat property of 15 to 30%. Now, when I get to the update of FIT, everybody will see these indications of pricing that I'm giving you. This is not the amount that FIT members paid. We've got a mechanism that we think is better. These are the increases the commercial insurance carriers are putting out to people. And also submission volume is very high. But again, there's getting to be very little flexibility or exceptions, where just a couple years ago, if we needed an exception, it was fairly easy to get. Now to talk about the general liability and the professional liability. Now, this market, starting several years ago, had been very stable. But a big thing came along called social inflation, and that remains the key driver for deployment. There's not a day that I don't read a new article by somebody in the industry talking about social inflation. And for those of you who haven't heard the term, social inflation is simply a preponderance of, and I don't want to use the word millennials because it's not just millennials, but younger people seem to feel a little more entitled and are more likely to bring lawsuits. And then the court system is being more liberal with the judgments. I actually read one this morning that over the last 10 years, the average size of a judgment has grown by over 50%, which is very, very substantial. Sexual abuse coverage continues to be a concern for the insurers, always has been. But again, one of those last points where it's hard to get concessions. They never really wanted to provide them. We needed it. We would ultimately negotiate it, but it's really getting harder to get that line of coverage. Once again, like the property, the recent renewals from standard insurance companies have been in the neighborhood of 30%. Now, I'm sure everybody experienced this year. The excess liability and or umbrella, once you get above 1 or 2 million, the price increases is 50 to 100%. And in a lot of cases, they just won't provide it. And that all goes back to that social inflation. If they limit their coverage to 1 or 2 million, they kind of take that off the table because they can account for what claims are going to go from 1 to 2 million. if you have, we've had members in the past that bought 50 million. You really can't adequately price for 50 million of coverage when you could have a $50 million jury verdict. And then, of course, the COVID-19, there are legislative initiatives, I can tell you, in virtually every state, if not every state. Again, Florida so far has been very business friendly, and we haven't had, there's both sides of the aisle are working this very, very hard. Industry groups are trying to get the governor to pass a statute that would give immunities to businesses that kept their people employed. And next, I want to talk about the casualty rate. This is the liability. Once again, I used a very similar bar graph. You can kind of see the way it's heading. And again, this was over the 3-year period, not including the one we're in. So you can see at the very end that November, December already had a pretty steep slope. Now imagine go into March with the background of all the stuff that we've talked about so far, and those pricings are getting a little on the ridiculous side. Let's talk about the state of the auto market. I think everybody that's on the podcast has seen rate increases over the past 3 years of about 10%. So the rate increases on auto sort of were baked in where they weren't for the property and the liability. Recent renewals have gone down on the increase, not down on price, but now we're looking at rates from 5 to 10%. The key driver is still the same thing. We talked about this. As a matter of fact, either last year or the year before that, we had a session on it, which is distracted driving and increased cost of vehicle repairs. Those are sort of self-explanatory at this point. An interesting thing is, despite the reduction in frequency of auto claims, there still seems to remain a severity concern. So, I mean, essentially what that means are people are driving less right now. Not everybody's returned to work. I know we're still working remotely, but people tend to be driving in a more careless fashion and faster. So although there are fewer claims, we're seeing more severity or larger claims. And then, of course, that last point is there are fewer vehicles on the road, and that has, again, helped the frequency, which is why ourselves, along with most of the personal lines carriers, actually gave back some auto premium because we were seeing fewer auto claims. Now, and I point that out because everybody's seen the residential insurers or the personal insurers giving back money. If you'll notice, you never saw any commercial insurers doing that. We thought it was only fair. Essentially, what we saved from claims, we gave back to members, and I don't know of another commercial insurance organization in the country that did that. So, we appreciate everybody that's on as clients, and we'll continue to try and help you control your costs as best we can. And finally, the state of the market for work comp. As of January 1, 2020, OIR approved a decrease that was proposed by NCCI. One of the knocks is with the COVID, most carriers consider social service and nonprofit agencies as healthcare. And where that becomes a problem is, again, from a work comp state coverage, those workers are going to be covered under work comp. So it's detrimental to a lot of our members who, some of them have some health care. Most of our agencies that we insure are not healthcare agencies, but the insurance company look at it. The work comp for the frontline workers in healthcare are the ones that are the most challenging to renew. That kind of goes without saying. On a good note, the work comp has enjoyed a soft market for several years. So where all these other lines, I'm giving you sort of a doom gloom presentation, the work comp is actually improving some. One thing that happened, NCCI came out, and NCCI is National Commission on Compensation Insurance, and they are the rate making agency. They're not a state run agency, but they provide proposed rates, and the various states adopt them. They gave guidance, and all the carriers in Florida have followed it, which is one of the reasons we tell you, turn in every COVID claim that you have. is because they need to be adjudicated to find out if there is coverage. And NCCI says, while we have to cover the claims, we can't count the number of losses against you in your experience mod. So therefore, just make sure you turn in those COVID claims. We're going to adjudicate them exactly as the state law requires. And the impact of COVID may be significant for essential business workers groups. So that's where we're going to make a lot of our time and our marketing efforts explaining to our excess carriers why most of our pool is truly not healthcare. We don't want to get lumped in to those classes of business where the carriers think they're going to have to be responsible for paying for everything. Okay, now that we've talked about the boring stuff, which is just where the markets are, let's talk a little bit about fit and how we're doing. And again, I want to remind everybody as I go into this session, because it's a little bit more exciting. On the right-hand side of your screen is the little toolbar. If you have any questions, normally we just kind of have a question and answer session right here live. But if you have any questions, please type them in. We've got Justin standing by, and when we're done, I'll do the best to answer any questions that anybody has. A fun fact that Michelle put together was 14 years ago. Again, that's when Fit started. Yahoo.com was the most popular website. Today, it's the 47th. I didn't go as far as asking her what the number 1 or 2 is, but I think we could all guess at this point. So a lot has changed in 14 years. Now, normally, this is where for several years, and I finally decided to take it off. Normally, before this, I go through a timeline because there's a lot of new members that are online. And so some of this stuff, I apologize. For those of you who have been to 14 of these things, some of them are going to be a little bit redundant because it's really important that our new members understand pooling and how it works. Then I usually have a line graph that shows the history of insurance pooling. And the point is, insurance pooling was the first type of insurance thousands of years before the first insurance company ever wrote its first policy. The ancient Samoans actually were pooling their resources so that if something happened, no one would be completely put out of business. So then you jump to, okay, who in Florida can pool? Because every state has a different pooling law. As far as I know, every state allows pooling. It's just differentiated by whom it is that can pool. So in Florida, there's a separate statute for each of these. The first one was local government. The next one was public utilities. The next one was housing authorities, then independent educational institutions, then electrical cooperatives. And finally, the statute that we helped usher through was the nonprofit organizations. The local government, the first one, that dates back to the late 1960s. And obviously, the nonprofit was in the legislative session of 2007. And if you look at these types of entities, it's obvious what the state is trying to do. These are all entities that provide services to the citizens of the state. They're essential services, and most of them are supported with tax dollars. So what this actually shows is the state government has identified that pooling is a more efficient way to provide insurance, or else why would you take these classes of entities and pass laws specific to where they can pool, but they won't let, say, contractors or apartment buildings. So those are the 6 classes that can pool in the state of Florida. And here's a few things. Again, this is a little redundant for those of you that have seen it, but we were formed under 624-4625. That's the statute of those classes. That's the one our particular statute is. The pool is governed by a board of directors, and under that statute, the board of directors have to be fit members. We do submit financials and actuarials to the Office of Insurance Regulation every year. As a matter of fact, our filing time is the same date every year. It's on or before December 1st. So our audit is pretty much done at this point. I'm going to go through some numbers, but they're going to look the same as the audit, although we're probably still a week and a half from turning that in. We must purchase excess insurance from authorized carrier. So another thing that the state baked into the statute to make sure that these entities that participate in pooling are financially secure is I'm going to get into how much reinsurance the pool buys. Well, not only does the state regulate the pool, the state regulates all of the carriers that we buy insurance from. And a majority of our risks, specifically the catastrophic risk, are transferred to A-rated carriers. And, so that's how we've paid out so much in claims in comparison to the financial position of just the fund on its own. Now, Michelle has, and I'm going to let it run for a minute or two here, but I wanted to show everybody because we really do have a good time, and the people that have came tend to come back. We do have a lot of new people signed up this year. So we're going to run a very short video to just show you scenes from, it was actually last year's annual conference. So I'll kick back on here in a couple minutes, but everybody take a quick look and remember how much fun we had last year and how much fun we're going to have next year.
Insurance Trust Educational Retreat. And we've grown from just a few members, and I wanted to recognize the three originally founding members who are members of our board, and that would be Joe Anello and Jim Weeks and John Cherry. These three folks had the foresight when Shane came calling that first day way back in 2007 to take a chance on Florida Insurance Trust, and saw that it was a great idea, something brand new to the nonprofit social service market.
A few things that you should know about FIT. I think most everybody in the room knows this. We were formed under a Florida statute that was passed in 2007. We're governed by a board of directors who thankfully has been very stable and consistent. They're also very personable. So if you don't know them, take a chance to meet them over the next day or two.
Well, at conference, you get to meet your colleagues. Also, the presentations or, renew relationships. But also the presentations help us with our work, whether it be about sexual harassment, whether it be about, computer fraud, etc. They're timely and they're beneficial.
Sexual harassment is not about sex. It's about power. You have to immediately investigate. You have to have a culture of safety. You need to make sure that you've crossed all your T's and dotted your I's. And that's how you protect yourself, your company, and your employees.
There's not a single industry that is untouched. Because if you are connected to the internet, it doesn't matter which industry you belong to. You will have employees, you will have customers, you will have sensitive data. And that's what, as a hacker, I'll be interested in. In today's age of Facebook, Instagram, and all the other social networks that are out there, LinkedIn, I can check out which high school you went to, which year you graduated, what your mother's last name was, what the name of your pet is in not more than 10 minutes.
One of the other things that makes FIT special is it's a true membership-driven program, where the membership itself, they actually own the insurance trust. There's no stockholders in the insurance trust to pay, so that really...
Hi, everybody. That's just to remind everybody what we would be doing. Could we meet in person? And hopefully by next year, we'll be able to. That whole video is about 7.5 minutes long. It shows a lot of the highlights from last year. So anybody that would like to watch the whole video, it's on our YouTube page. You can tell how technologically advanced I am. But it's on our YouTube page. So please, if you have time, go take a look at it. It shows some very fun times. Now, as far as the FIT service partners, when we run these things and we're kind of the face of the organization, we have an important role to play, but there's a lot that goes on behind the scenes. Under state statutes, we have to have a third party accountant, and we have what we think is the best, Shores Tagman. They provide the accounting services for over 100 pools around the country. So they are the premier pooling accountant. Ed Costner at Casualty Actuary Consultants, they're up out of Nashville. And once again, these aren't names of like the big three accounting firms, but they are the accounting firms that are the absolute best at what they do. The agent partners, I mean, we put a lot of responsibility on the agent partners. We do limit them because we do need partners, and I'll explain why in a little bit. But there's only 8 in the state, and they do a tremendous job of understanding our product, understanding the needs of their clients, and making sure the two match up. Administration, that's actually, of all these different services, administration is all that we actually as NPIS do. There are several things that make up administration, but certainly not any of these other services. The legal, we use Jack Brennan, the Brennan Law Office in Tallahassee. Jack's came to some of our events, and he certainly talked to some of y'all in person. But he's out of Tallahassee, and his whole practice is dedicated to insurance-related issues. So that's all he does. And then, of course, our claims and loss control is with Sedgwick, which happens to be the largest claims administrator in the world. Our claims are handled out of a Boca Raton office that's been there ever since we started FIT. In fact, we have most of the same adjusters there. The cohesiveness of having those claims accounts for a lot of the financial success of FIT. We always get questions how year over years on any particular one given year, you know, an insurance company can come in, lowball your insurance, but how could somebody do it consistently for 14 years? And it's a real simple answer. It comes from two sides of the slide. One is we have intentionally lower fixed cost of operating. So admin, what we do as the administrator, we do for about 10% of every dollar of premium. An insurance company, it varies a little, but on average, that's about 16%. One of those issues that I brought up about the partnership agents, typically an agent from an insurance carrier will get paid 10% for workers' comp, and we ask them to do it for 6% because it's better for the client. And because we're dealing with volume on each, they still make a decent living. But again, that's an additional 4% savings. And the same thing on the property casualty. A standard insurance company pays 15%, and we only pay 10. So, I mean, essentially, and then lastly, on the fixed expense side, the taxes, the state tax for pools is across the board 1.6%. Those are premium taxes. For standard insurance companies, those vary between 3 and 5% based on the line. They're different rates based on which line of coverage. So if you add all that stuff up, we've got a 15% advantage before we do anything else. And then when you have industry specialized claims handling, we close claims. And I think at this point, almost everybody on the call has had claims with us. And you'll know, I mean, we want to handle them judiciously, but we like to close those things down. From our experience in this class of business, the longer you let something sit open, the bigger it's going to get. So we actually track the statistics, and we close claims about 30% faster than standard insurance companies. And we have very few legacy claims. When we do our actuarial every year, of course, they develop it. And if you just go back 4 years, I'm not going to say there's none, but there are essentially no claims left open, which 4 years sounds like a long time, but in the terms of insurance world, it's like overnight. Now we're going to talk about the financials, and I'm sure we'll get some good questions on this at the end. Fun fact, and this is sad because this is me, but for the last 14 to 15 years, 1, 2, 3, 4, 5, 6 has been the most common password. I think I had that until they kicked me out and made me do something different. And then I did 6, 5, 4, 3, 2, 1. So, but no, that is kind of a pain. Now everybody's having to, for additional security, change your password every month or two. And it can be a pain. So I'm sure everybody experiences that. From a financial summary, again, Full financials are filed with the state. Anybody that would like a copy of it, it's kind of boring reading. I'm hitting the highlights, but they're available. Just contact us. But the important numbers we actually pulled out to the side. So member contributions, if we were an insurance company, that would be called premiums. We're up to north of 50 million. In fact, if you take us year to date, we're up to about 54 million, up from 44 million last year. So we had good growth. We had good growth because we didn't have to go up nearly as much as those commercial insurance companies that I was talking about in the last part of the presentation. Carrier expenses. Now, this is an important number. I'm going to refer back to it. This is the insurance that Fit buys. Now, remember, this is from the last policy period, not the policy period we're in. So the total carrier expenses last year, we paid $13,671 and some change. The loss-related expenses, these are just essentially claims. We paid essentially $23 million in claims in the policy period we're talking about. The underwriting expenses, that's essentially, you can read everything else, but that's the commissions to agents, the third-party administrator, the taxes, the pool expenses. That's all. It's line itemed out there for you, but I pulled it out as a pull out so you can see that that's 13. Net investment income earned. My goodness, I would give anything if I could get back to this, but we earned $439,000 in investment income in the period that we're talking about. That's essentially gone back to zero with all the interest rates because we are very highly regulated on what we can invest in. And I mean, it's essentially U.S.-backed securities or state-backed securities. So the net income from this year is $923,026. You'll see compared to last year, which is the right-hand column, we had put $822,000 into surplus. So when we go to the balance sheet, we'll review the total surplus. So going on to the balance sheet, you look at our assets. I mean, there's, like I said, we're highly regulated. There's not much fancy stuff we can do. The cash and cash equivalents are most of it at $27 million. The total assets, so the only difference between the cash and the total assets are receivables of various types that you can see what they are. But essentially, at any given time, the agents will owe us some money. There's always the insurance company owing us money back for claims that we've already paid. The expenses are $39,634,000. And so, and again, you can review all the different classes of the liabilities, but essentially it's taxes, premiums payable. So the fund balance, which that's the surplus, is $2.962 million. So roughly $3 million on $50 million of premium. One thing I always like to point out is, and this is a differentiator between buying from a pool and buying from a commercial insurance company. A lot of our competitors will make you think that we're paying the claims out of that $2.9 million. That's just not the case. That unpaid losses and loss adjustment expenses, that $39 million that's on the balance sheet, of which $22 million or $27 million are actually sitting there in cash. That's where the claims are paid. The additional money is surplus money that we have over and above what we need to pay claims. It is good to have a cushion, but in 14 years, we've never had a negative year. We've never dipped into surplus. And at a certain point, we actually have to look if maybe we want to do something different. So this year, even though surplus went up, we used some of that to decrease the premiums to members, because I got an exhibit coming up here that shows how much Fit paid for insurance versus how much was charged. And that's a prime example of it's nice to have a little, dry powder. Another little graphic representation of where we're at in members and written premiums. As you can see, they're pretty much in line. We have, for all 14 years, we've grown in membership every year. We've grown in premiums every year, and we've grown in surplus every year. And they all seem to be fairly proportionate. Now, all these big claims that we're going to talk about, where does the money come from? Well, obviously, Fit keeps a primary working layer, so Fit does pay some. In fact, we saw the number, and it was $23 million this past year. That's not what was paid in total. That's just Fit. our excess and reinsurance partners these are the four major ones. There are some additional ones, but the importance of it is, if you look at that best rating, best is a rating agency that actually has a numerical and a alphanumerical number that represents. So the letter represents how well best thinks the company is run, and that's from an A to a D. And then the financial number is based on the financial size, based on their surplus. And from a letter, A is as big as you get, and from a number, financial class 15 is as big as you get. So all of our reinsurers are the most financially sound reinsurers that best reports on. And they're the ones, when we get hit with the hurricanes, they're the ones that pay the big claims. So it's still, and I think everybody recognizes Lloyd's. You may or may not recognize Brit or Markel, but again, they're A plus 15. So that kind of represents itself. This is the exhibit that I was talking about. This is what I think everybody will be interested in. So our reinsurance, we go through the same process that everybody goes through. I mean, we have to go out to market. We have to travel all over the world because the markets are worldwide. And our reinsurance, the reason I pointed out the importance of that 13 million off of the profit and loss, that's what we actually paid for reinsurance last year. This year, Fitz Reinsurance went from 13 that I pointed to 20. So our reinsurance went up by 50%, which gives us a lot of heartburn. So, our commitment to you membership is, one, you will never get surprised, and, you're going to know what's happening. We certainly didn't want to come out to you and tell you, oh, it's looking like 50%. So we quick and went to work, and the FIT members rates increased by plus or minus 15%. And all of that is because FIT absorbed the difference in cost between what FIT got charged and what we charged members. And most importantly, like I said, is the stability. We've never had a year where the increases, I think this was probably our biggest increase year I know it is, that we've ever had, but we delivered very few double-digit increases. And like I said, our biggest promise is you're never going to get surprised. When we first created FIT and got in the business, it was very common for carriers to wait till 3 or 4 days before renewal and show up with the 50% increase. And I know we can't run our business that way. We would never ask you to run your business that way. Therefore, we have mandatory quarterly meetings with the agents. At those, we set expectations of what we think, and the agents come and pass it along to you. And we'll continue doing that process. And we also commit, we're not going to give you a renewal that is less than 30 days ahead of time, so that if you need to make some arrangements, you have time to do it. This next one, it's kind of hard to see. That's why I did the call outs, but it's the property modeling. And we get asked on a somewhat regular basis, well, how much property insurance did you buy? Because everybody is worried about hurricanes and other catastrophes. Well, all this is a little excerpt from, this is the generally accepted property modeling that the whole insurance industry uses. Insurance companies use it, insurance pools use it, and the whole report is about an inch thick, and it lists thousands and thousands of locations and all their constructions, and they run it through a very fancy model, and they come out with this. And this is kind of the cover page. And what it does is it provides the probability, starting out at a 20% probability, which would be having a big storm every 5 years. And it goes all the way up to, 1 in 1,000 year storm. The point of reference for this is the takeout insurance companies, which are all of those homeowners companies. And I think there's 40 of them in the state that the state oversees. They require them to buy to the 100-year event. So at the 100-year event, the number for FIT would be $33 million. You can see the 250-year event. That's the gold standard that the state requires of A-rated admitted insurance company. And so therefore, if we were holding ourselves to their standard, we would need $51 million. If you go up to the 1,000-year event, then we get up to 89 million. Fit buys $100 million worth of property coverage. Now, on a year like this, when the property is going up so much, it's easy to ask, and believe me, we had a lot of hard conversations. If 250 is enough for an insurance company, don't we just go down to the 51 instead of 100 and save the money? And yes, that would have to be considered. The board of directors would have to approve it. We would certainly come out to everybody and explain it. But it was important to us that we kept both the property coverage and the limits. And therefore, that slide about how Fit kept the property pricing and overall pricing down, that holds true. And just to give you an idea of some of the losses, this is, I think, just over the last 2 years. I mean, you can see we've had $4 million losses, a whole bunch of ones, 1.7, 1.2 on all different kinds of classes. Oh, I just got a note slipped to me. Peter just informed me this past year we actually bought 150 million of loss limits. So thank you, Peter, for correcting me. I can tell you personally, I haven't seen the modeling be incorrect, but I would certainly rather be more on the conservative side. And I mean, I think everybody gets the idea of how conservative we are. So kind of our takeaways from this, we always, every year we try and look at what we did good and what we did bad. And, what we feel like we made advancements on this year on behalf of our membership is we did issue 15% auto premium credits for April and May as a result of decreased claims from nobody driving on the streets. We expedited all the work comp premiums where people were expecting a return premium. Again, trying to get some of your insurance dollars back in your pockets. We've given back $400,000 to the benefit of the membership and some partnering associations. We obviously, everybody knows we get invited, and it's an important element of our job to actually participate with you in all your fundraising activities. We understand it's important to you. We try and provide as much as we can. And eventually, we're not going to be able to say this, but in 14 years, we have never given a non-renewal due to claims history. It just infuriates us, even us that are in the insurance business, how an insurance company will take your money for 20 years, never pay a claim, and then when you have a claim, they cancel you. I mean, I can tell you that infuriates all of us, including me, more than you'll ever know. And that's what we commit that we'll never do. We're going to be an insurance partner, and when you have a claim, we're going to come and cover it for you. I think that's it. Time for some questions and answers.
Good afternoon, members. Justin Wiley here, and we do have some questions from the audience for you, Shane. The first question is, can you please explain the difference between a general liability and a directors and officers or D&O claim?
We get that question a lot. General liability is typically property damage or bodily injury. So it typically involves touching or harming something. Directors and officers provides coverage for the board and senior membership for wrongful acts. So that typically doesn't involve touching. So if you think about what you would do as a board, hiring practices, firing practices, sexual harassment, that almost always falls under the D&O, or the general liability. It is what it sounds like. It's just general. Your slip and falls, like I said, personal injury. We happen to be in the same building with Morgan & Morgan. So the whole top half of this building could tell you all about that much better than me.
Question number 2. How are COVID claims relating to general liability and workers' compensation going to affect the financial standing of FIT?
As of right now, the claims are trending just fine. We do have a lot of COVID claims. I get reports on COVID claims broken down at least monthly, sometimes weekly. And what we're seeing is we are paying quite a bit of COVID claims, but the other claims, because people aren't working. So we talked about the auto claims were down because people weren't driving. Well, people also aren't working, or they're working from home. And so all other claims are at this point offsetting the COVID claims.
So question number 3 is, do you expect umbrella coverage to continue to increase in price? And how do you determine the proper amount of limit to buy?
Wow. Okay. That one gets a little tougher. Yes, from everything we've heard, excess limits are going to continue to be very costly and hard to get. I mean, I do think they will be available, but it's just going to be a cost factor. I can tell you, I don't know the exact statistics, but a lot of our membership that had traditionally just bought big limits because it was cheap, everybody rolled it back, at least for this upcoming renewal period. I think we're going to see a very close to what we saw this year, which is some organizations, if you have a lot of healthcare or a lot of children's services where you have abuse, we're probably going to be limited on the number that we can get you. If you're not in one of those classes, we'll probably be able to get it for you. We're just going to have to work our butt off to try and get it at a cost-effective price. Oh, and the second part was, how do you determine how much you buy? I actually went to Florida State for insurance school, and this is one that, even going back to my education days, I don't think anybody could tell you. It sounds like a cop-out answer, but you just got to buy as much as you can. I mean, at a certain point, it's always smart to buy high limits. I do know certain of our members, in fact, a couple of our board members, take a little bit of a different approach, thinking whatever their limit of insurance is what they're going to get sued for. So people take different approaches. I don't know of any standardized answer other than get options every year, and it's smart to buy it if you can. So buy as much as you can, but there does come down to a practicality.
Question number 4 is, what is workers' compensation Part B?
Workers' compensation Part B is something that you very rarely ever hear about. But when you actually get your work comp policy, coverage A is your statutory limits, which there's not a dollar associated with it. It's literally, if you have an injured worker, they're going to get their statutory benefits, which is they're going to get their health care paid for, and they're going to get their lost time paid for. So that doesn't have a limit. Coverage B, and I've never seen one of these in my insurance career, and I'm not sure if anybody on our staff has. Coverage B is a true liability limit, because you could have a comp claim that is so egregious that the courts of competent jurisdiction can make workers' compensation, which is supposed to be an exclusive remedy, which means if you provide work comp, your employees can't sue you. Yeah, that's true, but it only goes so far. In certain egregious situations, a court could say that you have a liability issue on your hands, even though it was an employee, and there will not be any coverage under your general liability because there's an exclusion for things at work. So it's actually a liability limit. You never see it used, but it's to cover in the rare case that you're held liable for an egregious claim.
And the final question, Shane, for you is, and I think it's relating to our third-party administrator, is Sedgwick formerly York?
Yes. In our wonderful insurance world, organizations of all sorts are rolling up. Now, the thing that we have going for us that we feel very good is we actually started back in 2007 with a company called F.A. Richard. They were out of Louisiana. I thought that they were the best claims administrator out there. York, several years ago, I want to say maybe 5, bought FARA. We were able to negotiate utilizing the same office that's down in Boca, keeping the same management and the same adjusters on. So we technically moved from F.A. Richard to York, but the claims kept going well. And just this past year, York got bought by Sedgwick, who is the largest claims administrator in the world by a very good bit. And those negotiations are actually going on as we speak, which is we're pretty comfortable with the way they're handling claims. We want to make sure they're absolutely best in the business. So we're looking at that right now. But yes, York is now Sedgwick, but it's still the same Boca office. It's still the same management, and it's still the same adjusters. And of course, from our standpoint, we have Jennifer Lister, who I think everybody knows. She does a great job of staying on top of all of those claims. In fact, she meets most of the people on this call for monthly claims reviews. So as long as we have us running herd over it, I feel very good about our claim situation. And now I'm here, obviously all day today and all day tomorrow. We've got a great lineup for you. I'm looking forward to seeing the other presenters. But even in this format, if people have other questions, please go ahead and enter them, and I'll make sure I either readdress them before we close, or I'll just, give you a call personally and answer any questions. And now I think I go back to the Mad Hatter. I think Doug's got another giveaway.
That would be the Dean of Green, trying to get some money away. But I see we got Chris and Robert up next, which are great speakers. And I told you, lawyers aren't off limits. They're not on my list. So I got to read you a quick lawyer story. It appears that, got to find it. This hat is kind of messing me up a little bit. Well, here we go. A man was sent to hell for his sins, and he is being led into the pits for an eternity of torment. He saw a lawyer passionately kissing a beautiful woman. What a joke, he said. I have to roast in flames for all eternity, and that lawyer gets to spend that with a beautiful woman? Satan jabbed him with his fork. He said, who are you to question that woman's punishment? So our next winner is, and I'll have another lawyer joke for you. Number 86, which is, 86 is Steve Valing, Palatka Housing Authority. Congratulations. And we turn it over to Peter.
Thank you, Doug. That was a funny lawyer joke. I even laughed over here in my office. Thank you also to Shane for that wonderful presentation. We enjoyed that very much. And like he said, if you have any questions regarding that presentation or any other, drop it in the chat. Or of course, you could email it to any of us. You probably have all of our contact information by now. And Jennifer is probably the best contact for everybody. So with that, our next presenters, for anybody that has attended a FIT conference in the past, these next two presenters need no introduction, but that wouldn't do this dynamic team any justice. So Chris Carmody with Gray Robinson is a designated professional lobbyist and practicing attorney specializing in the area of government relation matters. And his partner, Robert Stewart Jr., also with Gray Robinson, is a senior government affairs consultant and has a leadership role in the strategic decision of their practice. I know I speak for everyone when I say that we all look forward to this session each year. And thank you, gentlemen, for being here again this year and giving us a great presentation. So take it away.
Wonderful. And I believe, thank you, Peter. And I believe the presentation is going to be shared on the screen there, and we'll jump into that. But a couple notes here. First, as Shane said, y'all have been around since about 2006. That was about the last time my magic were relevant, or Robert and I's magic. And I think that was when Shane graduated from FSU. So congratulations on that wonderful anniversary, Shane. Robert and I, thank you for the setup here. We've got what we think is a good presentation, and it's themed around the NBA basketball bubble. We originally were going to do this back in March with March Madness, but as you all know, March Madness didn't happen. And so what we went ahead and did is we did this around the NBA and tried to help create those analogies there. Robert and I are big basketball fans. If you're not a basketball fan, all apologies, but at least our league finished their title. Robert and I's Gators, we're not even sure if we're going to finish the season in Saturday's postponements. So we're going to jump right in there. And how we do it is we want to start you out with who is relevant. And for NBA and the bubble and that's the top seeds, which we all know the Lakers won, and they were a top seed going in. But Robert, why don't you jump in and take it away and tell us who some of those top seeds were, who those decision makers were this session.
Yeah, thank you, Chris, and great to be with everybody today. So wish that we could be with you in person, but it's an honor to be joining you virtually today. And credit to the FIT team, because this technology that we're using today, at least in my opinion, far exceeds any of the other virtual conferencing technology that we've now grown accustomed to over the last 7 or 8 months. This has been really cool and really user friendly. So thanks so much for having us. As Chris said, you really can't talk much about a legislative session without hitting on who those top seeds are. Now we are just about a little less than 3 weeks away from an election. So a lot of the faces that you're going to see are going to change. So as you look at these next several slides, think back to March, April, May, as we were coming out of the legislative session. That's when these really would have made a bit more sense because we were right out of them, but a lot of them will still be the same. Obviously, the governor is critical in all aspects of Florida policymaking, and his role has grown exponentially since the end of session, overseeing the COVID crisis. Speaker Jose Oliva on his way out. He'll be replaced by somebody I'll introduce you to shortly. He's got a few more weeks as Speaker of the House. Same with President Bill Galvano. 2 years as Senate President, long career in the legislature between the House and the Senate, and now is outgoing and back to private life after the November elections. On the next slide, you will see the Lieutenant Governor, Jeanette Nunez. I highlight her because more than any other Lieutenant Governor, she was an absolute daily engager on behalf of the governor in the legislative process. She served in the House for 8 years before being tapped to run as Lieutenant Governor on the DeSantis ticket, and has really lifted the role of the LG in Florida to a place that it really hadn't been in a while. She is so active, so engaged in the legislative process, and worth mentioning here. The next slide are 3 that also won't change between now and 2022. These are the statewide elected cabinet members: the Attorney General Ashley Moody, Chief Financial Officer Jimmy Petronas, and Nikki Freed, the Agriculture and Consumer Affairs Commissioner, also the only statewide elected Democrat in Florida. She is a rising star in Democrat politics in the Democratic Party, both Florida and nationally, because of her status as the only elected statewide Democrat in Florida. On to the next slide, I'll introduce you to Chris Sprouse. Chris is the incoming Speaker of the House. He'll take over after the elections from Pasco and Pinellas counties, and a young attorney who is now rising to be the Speaker of the House. Next slide, some key House leaders. The one that I'll really point you to here is Paul Renner. Paul will be Speaker of the House after Chris Sprouse, so after the 2022 elections. Paul Renner will take over as Speaker of the House. The other 3 faces are ones that are outgoing from the legislature, but Dane Eagle, who I will mention, is now the Secretary of the Department of Economic Opportunity on the governor's team, was appointed to that back after the August primary elections. Next slide, some other key House leaders. Most of these are leaving the legislature and or transitioning into new places. So Brian Avila is the only one there that will remain in the House next year. Ray Rodriguez will be in the Senate. Mike LaRosa was appointed to the Public Service Commission. And those are some important faces as you look back at the legislative session, people that were playing critical, prominent roles. And then final slide for my section here are the key Senate leaders. The one really worth mentioning here, or the 2 worth mentioning, I should say, our President-designate Wilton Simpson. He will serve opposite of Chris Sprouse as the Senate President following the elections. And Kathleen Passidomo, assuming the Republicans maintain control through 2022, she'll take over in 2022 as Senate President. But the Senate is very close. It's 23-17 Republicans and Democrats right now. There's some thought that at least a couple of seats could switch to Democratic hands after this election. So what happens in 2022, particularly with redistricting, remains to be seen. And so now I'm going to kick it back over to Chris, who's going to talk a little bit about the COVID crisis and some of the things that we've been dealing with throughout the summer focused around that. So Chris, take it away.
Thanks, Robert. Yeah, it's hard to talk about the legislative session without talking a little bit about how it's been viewed through the lens of COVID and relief packages since legislative session. So we call it summer sadness instead of March Madness or double. If you go into the Washington, D.C. slide, that's where all the eyes are, and they continue to be down there. And you'll see the bullets in the next slide there. The questions up there are, will there be another stimulus package? Right now, although Secretary Treasurer Steve Mnuchin is negotiating and trying to work with it, and the president, depending on the day of the week, is either all in on stimulus or not, it would appear with, on October 15th, less than 18 days from the election, I would say not likely before the election. But I do think regardless of who wins, whether it's President Trump reelected or Vice President Biden being elected, I do believe they will eventually do another stimulus package, because as you recall, the way the CARES Act was set up was it was supposed to go through December 31st, which we are now quickly approaching. And that's because everyone really thought, maybe not all the epidemiologists and scientists and Dr. Fauci, but everyone kind of thought this thing would be over by December 31st. And as we're coming to the reality here, that is not the case. It looks like it's going to extend, at least how it's affecting our society and culture, it's going to extend far into the second quarter of 2021. So pay attention there. The second bullet you see there is, will there be a state and local government bailout? The state right now is sitting on about $3 billion of those CARES Act dollars. That is not pre-designated to local governments or anything else. It's just money that's meant to go towards helping with the efforts and relief of coronavirus. And what they're hoping is that the Treasury Secretary or Congress or someone will get permission to use that for pre-budgeted amounts. And we can talk a little bit later, and we will at the end of this slide, about what the state's budget's like and why they would need those dollars. But needless to say, the governor and his team would love to use those funds to balance our budget. And then, like I said, will the rules change? On the next slide, you'll see a little bit more we're going into with some of the updates. And some of these you're familiar with, but we'll go through those anyways. As you know, all of us are in phase 3. To the folks on this video stream that are from South Florida, welcome to phase 2 and phase 3 almost at the same time. The daily infection rates and hospitalizations continue to decline across the state. The 8 battleground states for the presidential election, Florida actually is the most stable at the moment, which, living here in Florida, we may not agree with that statement, but when you compare to Arizona or Wisconsin or Michigan, where rates are spiking again, Florida is generally stable, although we're having slight upticks more of recent, and who knows what those are related to. And of course, K through 12 and higher education is back. And there's certainly been problems with that, but most would say on the whole, 4 or 5 weeks into the semester, things are going pretty well, all told. So, and on the final slide, when you deal with COVID, we're looking at the CARES Act local funds. So just something for those of you that interact with your local governments, it's worth noting. When of those funds that were sent to the state, the state was about $8.5 billion that they kept. 45% of that was designated to local governments. Of that 45%, 11 counties, 1 city, Jacksonville, were given direct distributions from the feds based on percentage of population. And then the rest of those funds are going to be distributed by the state. The first bullet shows 25% has already gone out to those counties. The next 20% is currently being distributed, and it's based on plans that are being approved, and the money will be upfronted. And then the final 55% will be done through a reimbursement basis. So after you've burned through that next 20% tranche, then you can submit to the state, we want to spend it on X, this is what we've spent, and then you get a reimbursement, which is a little controversial. Obviously, the funds are technically the city's, the state's just supposed to dole it out, but that's what it is, and right now it's just collecting interest in an account at the moment. Moving along, so that was how you look at COVID, and it really shaped how we're looking into next session and how some of the vetoes, and Robert will talk about those in a little bit, handled on the budget, but now we're going to get into the meat of it. So we've gone over the top seeds. Now we're going to go over the top contenders. These are, whether it's players or the teams, these are the folks that when you start the playoffs or when you start the season, they're going to be in play, right? Usually it'd be the Golden State Warriors if they didn't have all their players injured. This year it was the Lakers or the Milwaukee Bucks, sadly not our Magic. But these are the folks that are going to make a deep run, maybe even get all the way to the finish line, pass, and get signed by the governor. And I'll kick it over to Robert to start with probably the biggest contender going into session with teacher pay raises.
Yeah, and Chris, I will say, for the benefit of the group, I don't really appreciate your pessimism about the Magic. I hope spring's eternal. The new season starts in January. I don't know why you're so down on us, but that's neither here nor there. We'll move right along.
Cheer up. Sorry.
And for everybody's benefit, the next several slides, really the next probably 10, 15 minutes, we're going to breeze through a lot of this. There's a ton of information on these slides. We're going to breeze through them so we can hopefully leave plenty of time for Q&A should you have it. But these are, like Chris said, the top contenders going in. These are the issues that you knew were going to have an impact on session, and none was bigger than the teacher pay raises. The governor wanted to make this last legislative session the year of the teacher. He wanted to raise starting teacher salaries across the state to $47,500, which would put Florida in the top 5 nationally for starting teacher pay, and he got that done. So the details are important, but not as important as knowing that they did get it done. The one thing I will mention is there at the bottom, there was an understanding and a concern on the part of the legislature that by doing this and not giving raises to seasoned teachers, they were creating a bit of a problem and a compression issue with brand new teachers who've never been in the classroom before making as much, if not nearly as much, as teachers that have been tenured for a long time. So had COVID never happened, I think next year they would have spent a good amount of time focusing on those more seasoned teachers. Whether or not they're going to have the budget to be able to do that remains to be seen. But net, raising teacher pay for starting teachers is a good thing, and raising all teachers to at least $47,500 was a good thing, and that did get done. Moving right along, another top priority of the governor was E-Verify. This was a campaign promise. They weren't able to get it done in 2019, his first legislative session. They were able to get it done in 2020. And the short version of that is government contractors and government's entities have to use either the E-Verify or the I-9 process to run all of their employees through it. Again, it was a campaign issue. It was a promise that the governor made as he ran in 2018 to get this done, and they did ultimately get it done. Another huge one, water quality and water quantity. The governor ran again on this idea of increasing funding for water quality and water quantity projects. His first executive order in January of 2019, right after getting inaugurated, was to call on the legislature for $2.5 billion over 4 years in new spending. He got that money in 2019, really more than he needed, $650 million on a $2.5 billion 4-year goal. Got that money again in 2020, and got more than, again, what 1/4 of that would be. And I would say that's good for a couple of reasons. One, the budget is very much tightening as we come out of COVID. And two, the first 2 years, the Department of Environmental Protection literally got so much money from the legislature they couldn't spend it all. So a lot of that money rolled into the current year. A lot of this year's money is going to roll into next year. But this is something that continues to be a priority of both the governor and the legislature. Initial focus has been on Lake Okeechobee and the rivers streaming to the coast from Lake O. But the money also goes to the water management districts and the local governments for shovel-ready projects that increase our quantity or increase our quality of water throughout the state of Florida. I'm going to pass it back over to Chris now to talk about healthcare reform and a few other ones that were, again, top contenders, very expected issues going into the session.
Yeah, and just to correct the record, I mean, we made the playoffs, Robert, so I'm excited for the Magic. I'm wearing the colors.
2 years in a row.
I'll pump this up here. All right, healthcare reform. We talked about teacher pay raises, one of the contenders. This might have been a close second, if not an even first place with them. Speaker Oliva, going into his 2 years as speaker, had a priority of breaking up, as he called it, the industrial healthcare complex, or the robber barons of healthcare. I don't mean to offend any of you, because I know many on this stream are in healthcare in some form or another. Those are just his words. As you recall, last year, he broke up the certificate of need process. And so going forward, there will be no certificate of need, with a few exceptions and statutes, and how your healthcare facility is approved. This session, it was focused more on scope of practice. And what that means, you see in the first bullet, registered nurse and pharmacist. So registered nurses now will be able to practice in certain scopes without a doctor. And they would move forward. As you can imagine, the Florida Medical Association opposed that strongly. That represents the doctors groups that did their 4 years of med school, the residency, their specialties, what have you. They certainly took a little umbrage to the fact that they would cede some of that scope. But that passed and was approved by the governor as well. Pharmacists, we've all probably had to go to a doc in the box group at Centricare here in Central Florida area, where you get swabbed for the flu or for strep or something else, and the doctor comes in with the nurse and they say, here's your report, you've got the flu, you're going to take this antibiotic or whatever. the whole idea was a pharmacist can do the very same thing, right? They give their shots for your flu shots and everything else. They can swab you, they can run the tests, and if you come back positive for something, they can give this. And hindsight being 2020 now, this feels like it was a little bit of brilliance in the sense that everything going on with COVID, we'll probably want pharmacists to be able to do some of those swab tests to help people get test results quicker in the future. And this will open up the door for that. But at the time, this was, as you can imagine, very controversial, allowing pharmacists to do the swab and then to prescribe the drug. They put some safeguards in there talking about they have to refer them to a doctor if symptoms continue after 7 days and what have you. But these were both critical to Speaker Oliva. He put the budget at stake with this, was willing to sacrifice the budget if he didn't get this done. He got it done. The governor signed on the same day, and that is now law. Moving forward, you have the tax cuts. Any normal year, there would be some significant tax cuts. For the last 8 years, the legislature has pushed forward tax cuts. As you'll see in the bullets, they still did some, but it was very trimmed down, and that was because the tax package is always negotiated in the final week of session. And the final week of session this year is when the COVID-19 pandemic crisis really just settled in on how dramatic it was going to be. And you saw around a $300 million tax package get reduced to barely $60 million, and that was to pay for the back-to-school sales tax and the hurricane preparedness sales tax. Everything else, the business rent tax and other things, were stripped out. So that was an unfortunate loss, but probably necessary because that freed up with some other cuts that they were able to do about another $300 million cushion in the budget to make sure that we could weather the storm from our economy. And then if you move right ahead, you've got from there, we've got Visit Florida. So if you recall, Visit Florida was a bit on the chopping block this year. It was set to expire on June 30th, if not saved by statute. As you see, they saved it for a 3-year sunset, which will put it beyond this current term of the governor and beyond the Speaker of the House and the President's Senate. So this will be something for the future leadership to deal with if they want to continue. And $50 million was appropriated. With a tight budget next year, if I can predict anything, but you can go ahead and move forward as we move forward. The Visit Florida will get a lot more funds next year. Our tourism industry is probably taking it harder than any other industry out there. And everyone knows that is a major pillar of Florida's economy. So they're going to put some more funding into promoting the state. And then an interesting one, this probably wasn't going to be the top contender when the bill was first filed, college athlete compensation. But then the governor, a former college athlete himself, when he played for the Yale baseball team, jumped in and full-throatedly threw his support behind this legislation. And what it does, after some negotiations and what have you, it ultimately will allow an athlete to be compensated when a university or others profit off his name, image, or likeness. But you'll see at the very bottom of that bullet is it goes into effect July 1st, 2021. That was by design of, they wanted to give the NCAA a chance to get their house in order before next year, because really the state of Florida doesn't want to have, they don't want to be in a silo as much as they want to take care of their athletes. Our athletes get paid, but what happens if they go and play in a different state and this and that? They'd rather the NCAA get their house in order and also allow for other state legislators to also pass similar laws that would put more pressure on the NCAA. NCAA has said they're going to change their rules, so hopefully they're done by July 1st, 2021. Interestingly, in this COVID and pandemic environment, what that profiting off your name, image, and likeness will mean will be more interesting, given that fans are barely allowed to go to the games these days. But it'll be an interesting day, but not an early contender, but emerged to be a top contender. So when you talk about the bubble, when you talk about the NBA, the one thing you have to do is what just happened. And for my friends in Miami, I'm sorry for you. I was rooting for you that you didn't make it. But the NBA Finals, you got to crown a champ if you're going to do that. And just with the NBA and the NBA Finals, they can skip all the other parts of the playoffs. Just put the 2 best team in the finals. You got to pass a budget. Constitution says you don't have to do anything during session. All these other bills we work on, nothing. But you got to pass a budget. And Robert's going to tell us a little bit what was in that $93 billion package.
Yeah, that's exactly right, Chris. And that $93 billion package that they passed in mid-March, it ended up being a lot smaller than that, and we'll talk about why. But like Chris said, it's the one thing they have to do every year is pass a balanced budget, and they begin that work. It really is a year-long process to get to the place where they're able to pass a balanced budget. And as soon as they pass it and the governor exercises his power of veto on it, for line item vetoes, they immediately begin working on the next year. The work really never stops in Tallahassee on this budget. So if you go to the next slide, you'll see very quickly, kind of in a pie graph, what the budget looked like, and that's past tense because of the vetoes that we'll talk about on the next slide. But here you see, without question, Health and Human Services being the largest piece of our budget, followed shortly behind by K-12 spending, and then everything else sort of flows in there. Transportation, economic development, higher ed, criminal justice, agriculture, natural resources. You kind of see where the big pieces of our budget go. And the vast majority of our budget is either federal or state trust fund dollars or federal drawdown funds. Really, the top line revenue that they call that's referred to in our budget is only about a third. That's your sales taxes, your dock stamp revenues, funds generated in Florida that are truly flexible in terms of spending. The rest of it's kind of already allocated before it gets to us, or it's part of a drawdown through Medicare or Medicaid, those types of things. But you see there kind of what the budget was supposed to look like. Going on to the next slide, you see the vetoes. The vetoes ultimately totaled $1 billion, the largest veto in Florida history. If you're a Game of Thrones fan, and I wasn't, and still really am not, but the governor, the day before he released his veto list, said that it was going to look like the Red Wedding from Game of Thrones, which I thought was really interesting. So I did a Google search of what that was, and I quickly found out that it was bloody. And that is exactly how the veto list ultimately was. It was indiscriminate across political lines. It was indiscriminate across jurisdictional or regional or even House Senate lines. It really was a whack of any project that the governor, and even some of the ones that he had pushed himself, ultimately got vetoed. And the reason for that is pretty simple. In Florida, when a project is vetoed by line item veto, the money goes back into general revenue. So by vetoing $1 billion, he created an additional $1 billion effectively in reserves that could be spent as needed, both in and coming out of the COVID crisis. So that's but you see there three of the big ones that were incredibly impacted as a result of the vetoes. If you go to the next slide, you'll see we're going to talk about some of the bubble champs, and so these are issues that perhaps expected, but the outcome was very much in doubt as to where they would end up. And so going to the first one is affordable housing, a topic that is discussed every single year, and every single year it's underfunded. This year, for the first time in probably a decade, the legislature fully funded what's called the Caldwell Trust Fund, which funds the two main affordable housing programs, SHIP and SAIL. Ultimately, after the vetoes, which this is one of the ones where the governor has said we ought to be fully funding Caldwell, and he wanted that fully funded. Ultimately, as a result of the vetoes, he had to swipe the SHIP funds, but SAIL did survive. But still, even in light of that veto, it's a step in the right direction for the legislature and the governor to both be recognizing that, particularly at the local government level, to move projects along, to get projects started, this money is critical. So hopefully we'll see that next year. Another one that we want to mention is healthcare. And again, Chris talked about this, so I'm just really going to gloss over it. But the healthcare reform was really a long-standing priority of this speaker. And in addition to the ones that Chris talked about earlier, another one that passed and is already under challenge in the courts was the parental consent for abortion. That passed late in the session. It was signed, I think, the same day that it passed, or if not the same day, certainly the same week that it passed. And that one is already in the process of being challenged throughout Florida. But it was largely a campaign issue, a very important one to socially conservative Republicans in the House and Senate and the governor, and one to keep an eye on in the months and years ahead. And then the last one that I'm going to talk about before kicking it back to Chris was the license plate bill. The license plates get filed every single year in Florida, and as many of you know, we have specialty license plates that run the gamut in Florida. We have more than 150 of them on the roads right now. What this bill does, and it's the first time in probably a decade or more that they've passed the license plate bill, is it creates a whole bunch of new ones, and you see some of the new ones that are created there, but then it caps all specialty plates at 150 and has a minimum number of annual sales that have to be made. And if a organization doesn't make their annual sales number, they could, after a year, cycle off, and a new one that's been approved cycles on. So you'll begin to see almost a rolling admission of license plates in Florida, but with a hard cap of 150. And you'll see some of the ones there that were listed and approved. But this was an issue, again, comes up every year. Nobody really knew where it was going to end up, and they ultimately did get it passed, and the governor signed it into law. It went into law October 1st. Chris is going to take it away with at least I think he is, with preemption issues, talking about some of the things where the state looks down at local government and says, yeah, you're not going to be able to do this anymore. The state's going to handle this. Those are issues every single year. This year was no different, and some of those passed, some of them didn't.
Just like we can count on a vice presidential debate having something random happen that will take over Twitter, you can count on the state house trying to push forward some preemption issues on local governments. And if you look at this slide, you can see some of these here. Vacation rentals, there was an attempt to preempt to the state the authority and how you regulate vacation rentals. As some of you know, you can the local governments can regulate them, they just can't outlaw them. And that died. And largely because the governor weighed in on that, did not like that they were trying to step in there, believes kind of in some local control. Local occupational license, this one I think you'll see come back next year, but it was to rein in some of the occupational licensing that's done both at the state and local level. With building design, this was going to try to create a little more uniformity amongst the cities and counties with building design. But as you all know, in South Florida, whether it's Broward or Miami or Palm Beach, it's different design standards than Orange County or Duval County. We all have a different, kind of history and culture there. Retainage reduction. This one's probably one that was much needed and ultimately passed, was applied by the governor. If you do a government contract construction job, the locals, depending on which jurisdiction, would retain significant amounts of the pay before they paid it back out. Which seems a little odd considering that all these projects are bonded, so you don't have to worry about funding and insurance coverage on that. So the legislature reduced how much retainage a local government could retain. Communication service tax reduction and reform, that was killed. This is driven by a lot of the streaming platforms and those who want to kind of reduce the cost cut there, but it would have a significant impact to locals as far as their tax base. And then continuing service contracts increase. This is another one that's probably a win-win, where the local governments and the state really saw eye to eye on this. If you're familiar with how architects, engineer contracts work, and you can't take price into account, they usually allow continuing service contracts, but only up to a certain amount. And a lot of those prices were based on 10, 15-year-old prices, and everything's changed since then. So they up the threshold amounts, if you will, that you have to then put it out to bid. So this will hopefully make some of those contracts move a little quicker at the local government level. And when you go to the next slide, you'll see there's a few other bubble champ issues, like those Phoenix Suns that went 8-0. Witnesses for leases. Some of you guys are probably familiar with this. If you lease out property that you own or lease property from someone, that you actually had to have 2 witnesses for a commercial lease or a residential lease, anything over 1 year in Florida. A lot of folks beg the question of why. This isn't 400 years ago, where you don't have state issued IDs showing who you are. You don't have these handy websites that show who exactly owns the property and who it's there for. So the legislature put forward a law that would remove the requirement that you have 2 witnesses. And so that went into effect as of July 1. So if you're entering a lease, you don't need to worry about getting witnesses. And in this COVID pandemic age where you're trying to do things a little more virtually, that certainly will help you out a little bit there. And then finally, on the bubble champs for this slide, we've got deregulation, giant deregulation bill that went through the package. You can see all those bullets there. I won't read them all, don't worry. Some of the things I'll point out is they changed the Florida Building Commission. They reduced the number of members there to make it a little more streamlined. But mainly, basically, if there's a county and city seat, they just reduced it to 1 public employee so they could fight over who that is. Did a little bit with how you license folks like veterinarians, construction contractors, and engineers, CPAs. But it was big. There's a lot in it. If you had any specific questions, if you deal with DBPR on a day in and day out basis, just call Robert or I. We can get you a little more details on that. I'm not going to. It would take me 2 hours just to read you the bill, and then you still wouldn't understand it because I'm not sure I would either. But moving right along, and we'll keep up the pace here. Those were the bubble champs. Those are the ones that were interesting. We didn't expect to have anything come with it, but they did. Now we're going to move into the 8th seed playoff battle. If you recall, going into the playoffs, Phoenix Suns had no chance. Then they went 8-0 in the bubble and darn nearly made the playoffs against the Portland Trailblazers. These are the issues that no one saw coming, but boy, did they make an impact, even if they didn't make it to the finish line. And probably the most impactful one, at least that got the most traction in the media, was the university takeovers. I'm going to hand that over to Robert.
Yeah, this is one, if you are a graduate or fan of New College of Florida or Florida Polytechnic, this one would have impacted you because on a late at night late filed long amendment to an otherwise relatively innocuous higher education bill. The House of Representatives put forward a plan to get rid of those two universities and give them to Florida and Florida State as just satellite campuses of those bigger universities. This was incredibly controversial, incredibly surprising. Really, nobody saw it coming, including the universities themselves, who had to quickly find a way to get their presidents up to Tallahassee from Southwest Florida and Lakeland, respectively, for New College and for Polytechnic, to basically get in front of a House committee and plead for their jobs or plead for their independence. Ultimately, the Senate wasn't interested in moving forward with this, and the bill fell by the wayside. But about a 48 to 72 hour just chaotic mess in Tallahassee as a result of this huge surprise that was filed by the House. Another one was additional constitutional amendment reform. Last year, 2019, there was pretty significant constitutional amendment reform that came out of the Florida legislature. This year, there was an additional bill, Senate Bill 1794, you can go to the next slide, by Senator Hudson. The main point worth making here, the main change of the bill for Florida law, is it creates a private cause of action for citizens to challenge the validity of a petition gatherer. So if you picture yourself outside your local Publix, you get asked to sign a petition. If you have a question about the validity of that petition gatherer and whether or not they or their organization have gone through the proper steps to register, it creates the opportunity for you as a citizen for a private cause of action against that group for potentially not following all of the guidelines. There's some other stuff in there as well that you can see, but that really was the main change worth mentioning here today, particularly now that we're in election season. And then another, this is our favorite topic, even at 11:40 on a Thursday, and that's alcohol. Every single year, there is an attempt by craft breweries, craft wineries, craft distilleries to expand the allowable freedoms for these craft alcohol producers. This year was no different. The House, if the House had their choice, at least under Speaker Oliva, they would just tear down the three-tier system for alcohol altogether. The Senate, a bit more conservative when it comes to those issues. They ultimately didn't get this across the finish line. But for those of us that love our craft breweries and our craft wineries and our craft distilleries around the state, the hope is that as time moves on, the Senate becomes a bit more progressive on those issues, a bit more open-minded about modifications to the three-tier system without tearing it down, just simple modifications. But we hope that bill will be able to move forward next year, but it sort of touches on everybody's favorite topic, particularly in the heat of a legislative session. And then lastly, I'll talk about required legal notices and papers. This is one that gets filed every single year, and it would basically undo the statutory requirement that a public entity, a local government or a quasi-governmental entity actually post in the physical hard copy paper their public notices or their changes of zoning and land use, their upcoming agendas, which is, as you might imagine, a very expensive proposition for many local governments and quasi-governmental entities, because the advertising at papers, as papers are really struggling, continues to go up. This bill never really gets any traction. Not only this year did it get traction, it passed the Florida House, it made it through a committee in the Florida Senate, and it would move a lot of that advertising to online, where it's far cheaper and far more dispersible to the general public. So it's kind of a local governments and the legislature against the newspaper industry. So this is one to really keep an eye on in the years ahead, because it got more traction this year than it really ever has. Chris is going to talk about a few more, and we're coming up near the end here. We're kind of blazing through this, but by all means, if you have questions about any of these, either now or after the program, the FIT folks know how to reach us. So Chris, take it away with some of these other ones.
Absolutely. Sovereign immunity caps. So all we need to tell you about this, and it affects more of your local governments, is for years now, decades, they've had a system in place that had the cap on claims bills, about 200,000 or 300,000, depending on the nature of the claim bill. There was a push by the trial bar this year to increase that to 1 million. That was amended down to 500,000. It only moved in the Senate. It barely moved. Didn't really move in the House. But I tell you this, is that it will be back next year. The House has the incoming speaker after the current one, Sprouse Renner, has expressed an interest to explore this idea. And it's, again, the good facts make bad law. The terrible circumstances of some of these claims bills is what make these legislators kind of go, well, we got to do something, right? It's not fair that these folks, can only get 300,000 before they come to the claim bill side and get the rest of the money. But the House held strong this year. The Senate didn't move. Why that's relevant if you're not a local government is if this was to be lifted, whether to 500,000 or $1 million, there will be more claims. There will be more payouts. The claim bill process will probably increase. And that'll just be more cost at the local government level, which a lot of times gets passed on down to the businesses and groups that are at those local government levels. So just pay attention to that. It didn't go very far, but it certainly made a little bit of noise there. As well, transportation bill, the reason that is relevant as we look at the next slide is that if darn near passed, and if it did, that would have been 2 years in a row that the transportation bill passed, which is, very rare in the legislative process. Secretary Tebow was hoping to get some stuff done in that bill, ultimately didn't make it to the floor, got stalled in the Appropriations Committee in the Senate, as it sometimes will do. But we point that out because that means next year, especially given everything going on with COVID and the lack of revenues, lack of gas tax, almost certainly there'll be a transportation bill passed in the 2021 legislative session. So pay attention to that as it affects all of Florida and our communities. Moving right along, when you look at that, TDT. So there was, before COVID, and for the last 4 or 5 years, there's been a lot of efforts to tweak how TDT, tourist development tax that is distributed, right? Florida has arguably, if maybe unquestioned, the strongest tourism market into all 50 states, maybe Hawaii a little stronger just because, that's what they do in Hawaii. But as far as revenues skyrocketed. Now, where Robert and I are in Orange County with Shane and the team, that it is certainly the meteoric kind of rise in revenue collections. So that's one way to look at it. Miami-Dade as well, and a lot of coastal counties. So there's always been talks of, well, do we have to put it all towards marketing or towards a venue to host a big event? And this year, some in-house leadership pushed forward some changes that was going to be a large expansion into water quality and water quantity type issues, which really, no offense to the folks that push it, don't have a direct nexus to tourism. Some you could argue, especially down in South Florida, where water quality is an issue, but you have the Everglades, you have other areas that draws tourism. But they went too far. They were going to allow septic tank upgrades and other things. So it went a little too far for the Senate. The Senate killed it, but I believe this will be back in some form or another next year. So pay attention to that as you look forward. And then we've got a few more to cover. I'm trying to remember if this is mine or Robert's. I think I'm handing over to Robert because he's our expert on the commercial airports.
Yeah, you're handing it over to me for the next few, Chris, and we are nearing the end here, folks, so bear with us, but some more things we want to make sure we cover. Commercial airport changes. This was a bill, again, not fully expected, really came out of some issues down in South Florida with the way that contracts were being procured and renewed and extended at the Miami International Airport, and ultimately it led to legislation that now in many ways ties the hands on a procurement basis of all of Florida's commercial airports. Not all of it's bad. Some of it's some really good transparency stuff, but it got mixed in, and the airports got a little bit concerned about some of the ways that it would slow down their course of business. This is a bill that ultimately did pass. It was signed by the governor, but I do think you may see some tweaks to it in the years ahead to just make sure that airports, which often have to run like a business and less like a government, are able to do their business in a way that is more streamlined than maybe a typical local government process. Moving right along, school board term limits. This has become an annual fight, largely pushed by the House of Representatives, not really interested in doing it in the Senate. It was filed again this year, and it died. But you can expect that one will come back again. And another one, THC caps on medical marijuana. This one became very controversial in the final days of session, and the Senate just wasn't having it. And ultimately, this you'll see very quickly on the next slide, this died as well. And then another thing worth mentioning as we move on to the next section, no NBA playoffs or the bubble in particular would be complete without some level of scandal. And whether that's, who's getting into the bubble, who's not, who's messing with the rules or tweaking their lineups in such a way to make it more controversial, and who's not. This session was no different. There is always an element of scandal, or there almost always is an element of some scandal in a legislative session. And this year it was the Domestic Violence Coalition, a statutorily created entity that received millions upon millions of dollars of Florida taxpayer money. Ultimately, it was found out through a House Integrity and Ethics Committee investigation that a lot of that money was potentially misappropriated in compensation to the CEO, where the CEO received millions of dollars in compensation for days that she didn't work, for excess amounts of money for things that maybe weren't completely appropriate, and more generally, just the concept of a state employee making that amount of money rubbed everybody the wrong way, and it led to subpoenas, it led to investigations, and those investigations remain ongoing. They were able to subpoena just about everybody in the case that mattered, except for the CEO herself. They were never able to serve her. They continue to work on that. But I do expect this issue will be back in the years ahead. And sort of as the one thing the legislature was able to do in the 2020 session, they did strip that organization out of statute, so they're no longer, automatically entitled to certain things that they were under the previous statutory structure. And then I'm going to hand it off to Chris for what's next, and we are coming down to the wire here, and we are nearing the end. So Chris, take it away with what's next.
Absolutely. So as Robert and I mentioned at least a couple times, the budget is going to be tight going into next legislative session. Amy Baker, the state's revenue estimator or economist, projected back in July that year over year from projections, the state's going to be down $3.6 billion. That's not how much they're down so far, just how much it's projected from the collections back in January through that will help get us through the budget this year going forward. If true, that's going to create a lot of problems going forward, because she said in the next year, that's about $2 billion down, and that's for the budget they're going to craft in 2021 session. Now, the truth is immediately after she made that forecast, the next month, August's numbers came in and they were weighed out. And turns out that August was actually a little better than they were projecting. Not as good as it was the previous August. We're still down. But when we were earlier months in this recession, looking at $400 million down in revenue, that was only down. August was only down $100 million in revenue, which is significant considering that that's still a heavy tourism month for all of Florida. So it could be a little rosier. Rosy is probably not the right word, but just not as drastic or bad as and dire as it's been projected. But for the moment, let's assume she's right. $2 billion short in 2021 legislative session for the budget, and what that means. I know a lot of you on this Zoom or StreamYard, that's the name of this platform, rely on legislative appropriations, and so those are going to be difficult in the next year. But they're going to have to come up with revenue, regardless of projects. $2 billion down, even if that's a conservative. Let's say it's more like $1 billion, right? If the numbers continue to improve, where do they find that? Well, as we jump into these slides, the first one I'll look at is gambling. And so as you'll see in those bullets, they came real close at the end of last session to upgrading and approving a new Seminole gaming compact. As some of you know, the Seminoles stopped paying into the state's general revenue fund about 2 years ago because of violations by the state and allowing some of the pari-mutuels to have blackjack games and others the way they were setting it up. They went through federal court. Federal court said, yep, the state was violating the compact. For a couple of years, I think it was 3 or 4, the Seminoles paid in good faith into a trust account for the state to have on this as sort of like, oh, we'll work it out. We'll just pay in good faith these revenues that are owed to the state. But in the last 2 years, they've said, we're not paying anymore. So that's $300 million that the state has not had that they would normally have. If they approve the gaming compact just to fix it, that's $300 million. If they update it and upgrade it, as many expected with craps and a few other table games, including sports betting, which we, as Robert and I understood when we were part of the discussions, was very real, was a very real possibility in that. And it was just more of how it gets done. That would be $500 to $700 million in state revenue. So from a prognosis of how this will succeed at the next set level in 2021, Robert and I give that a 3-point shot from the NBA logo. Not impossible, but still it's a gaming compact, so you can't, unless it's Dame Lillard or Steph Curry taking that shot, you probably don't give it a better than 50% chance, but still a decent chance. So we'll go to the next slide to look at some other revenue sources that they're going to go for. And we have also fun basketball analogies. Internet sales tax. Okay, so 2 years ago, the U.S. Supreme Court released the Wayfair decision that said you don't have to have a physical nexus to the state for the state to charge you sales tax. So think of Amazon. Before Amazon had warehouses in Florida, you didn't have to pay sales tax. You as an individual required to pay sales tax. You're supposed to write down what you order and send a check to Department of Revenue.
And we know, just for the record, we know that everybody on this call always did that. You always sent your check to the Department of Revenue. Sorry, Chris. Carry on.
Peter and Shane were showing us their receipts before we started this. They were like, here's last year. Here's all the Etsy stuff I purchased. Shane's got a real Etsy habit. But seriously though, no one pays that over, and it's been pushed year after year in the Senate, and the House is sort of getting a little more comfortable with the idea of enforcing the internet sales tax. It's already a tax. It wouldn't be a new tax. Public polling suggests some people would view it as a tax, but now that the U.S. Supreme Court has allowed for it and there's more pressure and a need for revenue, think back in March and April, the state probably wishes it had internet sales tax because we would have recapped a lot of those sales tax revenues that were going to online purchases. So I would call this a free throw. Not a guarantee, especially if you put one of the bigs on the line, but I would say there's a really good chance this bucket's going to go through the hoop in 2021 because they need the revenue. It's just an enforcement issue, so pay attention to that. A couple more revenue options that we've looked at. Marijuana. I tell you this because in 2022, it's widely expected there's going to be on the ballot, just like we've got some constitutional amendments coming up on the ballot. If you've already voted or if you're soon to vote, there's 6. It'll be on the ballot to fully legalize marijuana, not medical marijuana, but marijuana, like California, like Colorado, and others. If that goes through, and most people think it's polling such that it will go through, there's a conventional wisdom of, oh, why not just pass it at the legislative level and start taxing it? And trust me, there are Republicans that are saying do this. This is not this is largely a partisan issue, but there are definitely Republicans that are saying to do this. Now, on the other hand, as you heard Robert say earlier, the House just last year were trying to put THC caps on medical marijuana, essentially taking away the euphoric value of medical marijuana. The Senate had no business with that and said, no, thank you. But the House was trying to put a cap on that. So I would say this is very difficult to happen, even if it's almost a sure thing that in 2022, this is going to go in the Constitution and then everyone will legally be allowed to have marijuana in Florida. So I would say this is a full court shot. Could go in, but we hardly ever see those ever go in, even with the best of shooters. So I wouldn't count on that for looking for revenue. Okay, and then finally, let's look at what COVID and the relief packages are doing on that. If you look in the slides there's still some questions of, could there be a special session to modify the budget? I've told you about the revenue shortfalls and what have you. If it holds true, right, if September is just as good as August, and good's not the right word, but it's not as bad as it could have been. If it holds on and it's not as bad like August, then they probably won't need a special session because our revenue projections going forward, now that the governor has gotten rid of mask restrictions and has said the state's going to fully open up, he wants a fully sold out Super Bowl, et cetera, et cetera. In theory, our revenues are going to continue to creep back up. If, however, say the September projections are even lower than August and it shows that we're having another dip, they may have to because they have to balance the budget. And if there's not enough revenue in the current budget we're in, they'll have to do so. If there's a special session, they'll also look at liability. You heard Shane talk a little bit in his introduction about how there's going to be coverage on COVID claims and what have you. This is the same thing. Senator Jeff Brandes, who's always been a friend to FIT and our issues, he's talked about, he's got a piece of legislation out there that's going to put at least a 1-year protection window after the governor's executive order expires for the emergency order on businesses that are open up to the public on COVID claims. Unless it's, malfeasance or what have you, but general negligence claims will be a prohibited claim in Florida. And and it might even go further. Just the 1 year is what they're looking at right now. But the whole idea is until we really understand how this works, how can we hold anyone truly accountable if you're opening your doors, if you require a mask or not, but if you're cleaning everything and someone happens to get COVID from your building or your retail shop or what have you. So they're trying to put some protections in there. If it isn't in a special session, you can fully count on that in 2021. They will put something forward in the legislative session. And on that, before we go into questions or what have you, Robert and I have had a lot of conversations with the legislators, including those who are in the incoming leadership, of what next session is going to look like. Many of you participate through various other organizations you belong to, into Tallahassee days where you go up to the Capitol and walk the halls. I would say don't book a hotel without a refundable policy for that. It is highly unlikely that they're going to have the Capitol open for many people at all. I've heard some scenarios where it'll be just staff and the legislators, potentially media, but then, Robert and I are going to then become media professionals and start working our way through the Capitol because we care about getting our clients' work done. So they're going to be careful of how they do this. I've heard they will lock out all lobbyists. Maybe they won't. Maybe it'll have to be where you have to be tested frequently. But they're looking at ways. They hired epidemiologists at USF to help guide them on what they need to be doing. But it's going to be a different session. unless some miraculous thing happens between now and then where the virus goes away or the vaccines show that they're more than just effective, but they completely block it out. Something that gives some comfort levels to these legislators that they're not going to be creating a super spreading event for the 60 days of legislative session or the committee weeks. So as a result, it could be like what we're doing here today. It could be a very virtual committee week and legislative session process. The good news for folks like Robert and I, as we work on y'all behalf and others, is we've got all their phone numbers. We've got their staff phone numbers. We've got the email that they give to the people. We got the email that they only give to friends and family. We got them all. We kind of live for that business because, as you know, Robert and I are traveling a lot too. And even when you're in the Capitol, you can't always get access to them because they're behind closed doors in meetings and you got to text them, call them. So we're in good shape on that, but it's going to be a very interesting session. So I put that on your radar and we can certainly answer questions on that. But with that is the 60-day session in about 45 minutes. And I'm Chris and that's Robert. And we are always honored to do this. We hope next year we get to do it in person, if only because Shane and Haseeb and Peter always make sure there's really good cookies at this event. And we also like seeing all your faces in person and bringing up a few legislators with us.
Hello again, FIT members. We do have some questions for Chris and Robert. And the first one is a little bit of clarification from the audience regarding a section that you addressed earlier. But what types of nurses are able to operate without the doctor's sign-off?
So those are ARNPs. These are not any nurse, but those that are registered or ARNP nurses.
Yeah, nurse practitioners.
So question number 2 is, does the state of Florida have enough money set aside to fund this current year's budget?
Yeah, so we hit a little bit on that at the end, but going a little deeper dive. When I said that $3.6 billion, let's look at what they set aside back in the budget when we talked about the 1.1 in vetoes. Of the $93.2 billion budget, the state's projected revenue back in January actually had us at 94.5 billion in revenue to spend with our top line revenue and the Fed dollars. So they built in a cushion of about 1.3 billion just in the budget alone. So suffice to say, we've eaten through that 1.3 billion. As well as, you know, the governor vetoed another 1.1 billion. We've pretty close to eating through that 1.1 billion. So now we're looking at having gone through 2.4 billion. I think if I'm doing my math right, we're looking at the rest of our reserves. So in just the budget stabilization fund, there's about another 1.5 to 1.7 billion dollars that the legislature, you have to pull some levers to get there. So the legislature would have to act on that to make it available. And then beyond that, there's what they call the Lot and Child's Endowment Funds. And those are funds in the sense that they're market rate bonds and such. And in January, they estimated the value of those about 900 million to 1 billion in that range. I would say, given how the market is doing right now, that's probably higher. The market has actually been doing pretty well, all things considered. But if they had to get that far, that's cutting beyond the skin, the muscle, the fat. You're now down in the bone when you're cutting that far down. Those are hard because you actually have to put them to market and sell those. So I know the governor and the folks in his orbit and incoming Speaker Sprowls and incoming President Wilton Simpson, they really don't want to have to go that route, because then that leaves nothing for next year if we have hurricanes or if the pandemic continues with the recession. So they're hoping that they're okay. But if they have to go that far, the legislature can authorize the governor and they can do that. So the short answer is yes, there is enough right now, unless we have a dramatic turn. And like I said, August numbers actually showed we're doing a little better than we were originally projecting. But it's going to be tough. They've already told, the governor has told agencies across the board. Some of you have special appropriations through DCF or ACA or others have already probably seen this. They're cutting those about 6 to 10% across the board. You're seeing that in environmental projects, DEP's cutting their budgets back. And that's on top of the 1.1 billion in vetoes. So everyone's trying to tighten those belts going into not just this session, but the one going forward, to make sure they're in good posture. So there is enough money, but it's going to be interesting how they get to that number. That is why they are keeping their fingers crossed that the feds will allow them to use that $3 billion that they're sitting on in CARES Act funds to go towards budget stabilization. And I think they'll ultimately get there because a couple things are going to happen with CARES Act. And I saw a couple questions in the chat. it is highly likely that, again, regardless of who wins, Trump or Biden, that they're going to expand that December 31st deadline to spend the CARES Act funding. Again, when they built this, they thought we were all going to be done on December 31st, but here we are, and this is clearly going to go further. So it's highly likely they're going to extend that to allow states to do more relief efforts, whether it's business relief, whether it's other factors, or just even testing. So if they extend it, and if they give permission to the Florida and any other state to spend the funds in some manner, we will be in much better shape, and we won't have to dip into those funds. So it's going to be tight, though, unless we have a dramatic return on tourism and other pillars of our industry, our state's economy. It's going to be tight going into late 2021, and we'll have dramatic effects on next year's budget.
The next question is, do you expect there to be any tort reform relating to COVID liability?
Yeah, go ahead, Robert.
Yes. How far they'll be able to go politically, I think, is the unanswered question. But I do think it's something that is very much on the mind of the governor, very much on the mind of the House and the Senate about doing something for protecting businesses that are acting in good faith, using best practices, those types of things. But really, I think, in addition to saying yes, I think there could be, I think they're really hoping that the federal government deals with it as part of one of their packages. You've heard Mitch McConnell, if you follow the federal news on this, Mitch has wanted to make that a mandate within any additional CARES Act money or in whatever the next bill might be. I think the one the House passed was called the HEROES Act. The Senate has one called the HELP Act. Whatever one they come up with in passing, at least the Senate Majority Leader wants business liability reform to be a mandate within that thing in order to get the senators to vote for it. So it's possible it gets dealt with before the legislature comes back, and maybe the legislature's got to do a little bit of stuff that's state related. But the big question I think they're hoping is answered by the federal government.
Next question, and I think you may have touched on this a little bit, but is there discussion about expanding the FCCRA beyond the end of the year and the allowable payment parameters?
Yeah, I covered that there is discussion at the federal level of pushing that beyond December 31st. And the payment parameters, again, that's also the state's looking for that, because as one of the bigger concerns, two concerns that I think are affecting most folks is it can't go to anything that's already budgeted, right? So whether it's a state budget or a local government, if you put that in your budget that you were going to do it and you're like, oh, I'll just use the CARES Act to do my Wi-Fi expansion or my broadband or something else, that's not allowed. So you're kind of getting penalized if you were a local government that was thinking prospectively before a pandemic, and now you can't use that money. The other issue with that is, and I brought up Wi-Fi because it's relevant, and broadband is there are parameters around it. Has to be tied to relief during the current pandemic. And so when you talk about broadband and Wi-Fi, sort of putting just a temporary Wi-Fi tower somewhere near a school or near a neighborhood where kids need to do teleschool, it's hard to do. But you're seeing now that most scientists are now saying the effects of this pandemic are going to be well into 2021 and potentially into 2022. You're hearing a lot of conversations that how they view affected by the pandemic might change, because you can get a pretty robust broadband system installed in your county or city in a 6-7 month process, which will put you into 2021, but still very much within the window of this pandemic. So that will change. But again, elections matter and they have consequences, but I do tend to think whether it's Biden or Trump or whether the Senate is Democrat or Republican, given the pressures around this, I think they're going to expand the scope of the uses of those funds and expand the deadline of when they can do it. Now, I'm not a federal lobbyist, neither is Robert. We have an office and we can certainly get you better answers on those and follow up, but that's just my gut from everything I've heard.
And the final question is, are there or do you foresee any federal mandates to remove marijuana as a controlled substance? And how would that work?
So do you mean like if Florida were to legalize it fully, how would that be impacted?
I think it was more, the question is more on the federal level, if you foresee that changing marijuana as a controlled substance.
Got it. I think the answer is maybe. I know that's not probably the best answer that you want to hear, but removing marijuana or cannabis from the Schedule I list, I mean, legislation has been filed on that in Washington for 40 years. The House was supposed to vote on that in September, And I can, a couple of quick Google searches, I may be able to figure out whether or not they did vote on that or not. But it is in play, probably in a way that's more realistic than maybe it's been in a long time. Even this president has signaled before an interest in maybe looking at that. The Congress very much wants to look at that. Matt Gaetz, a congressman from Florida, has really led on a lot of marijuana-related issues, both when he was in Florida in the state house and now that he's in Washington, and he crosses party lines up in Washington to work on those types of issues. So I think there's a real chance that it could happen in the near future. And as more and more states begin to legalize cannabis, either for medicinal or for recreational use, I think at some point, you reach a tipping point with Washington as states begin to do that. So the answer is definitely maybe, and we'll just have to see where the next several months bring us. But if it were to not be removed from the Schedule I list and Florida did legalize it, we would simply operate in the same way that other states that have done the same thing have done. And that is that, it's still against federal law, but if the state allows it, there are going to be some ways in which folks can access it and utilize it. It'll be a really interesting time in Florida because, if you would have told me 10 years ago that we were going to be where we are today with public support for that, and where we could be in just 2 years with it being in the Constitution, I would have told you were crazy. But that's an issue that's moving fast in public support.
Yeah, just to wrap a bow on that, because I see some other questions coming in about how you tax something that's illegal. It's ironic that this conversation today is going on while they're doing the confirmation hearings for Amy Coney Barrett. Is a lot of these are federal and state constitutional issues in the kind of puzzle pieces fitting together. There's the Commerce Clause, there's federally regulated industries like banks, but how you do it is go into states' rights and not violating the Commerce Clause. If a state fully legalizes marijuana like Colorado, you can operate within that state, right? That means no more criminal charges for possession of marijuana. But if you do things that violate the federal laws, right, where they have parameter that is taking the marijuana over state lines or selling it in such a way through whether wire, like lack of better terms, the Etsy sale, putting it online and selling it, taking advantage of federally regulated areas, then you have a problem. And that goes even to the banks. They've had to come up with creative ways in California and others of how they deal with the banks, because that's a federally regulated entity. And that's who insures them, right? The banks don't have that insurance that makes sure if you have more than 100,000 or whatever the number is in the bank, that if it gets robbed, you're still okay. A lot of that is affected by that. They have to deal in mostly cash, and they have to go with credit unions and other ways. And a lot of these marijuana distributors hire their own security and basically their own Brinks trucks to protect them. It's complicated, is the short answer, but there's a lot of federal and state interplay. It's allowed, but it gets complicated, and you still can be in Florida where it's legally for medical marijuana or for regular marijuana and get arrested if you're violating certain federal laws that relate to that as it comes to commerce. So it's not easy to deal with, but they figured out ways of doing it in Colorado that are effective and work, and they haven't had too many issues. And that's why a lot of us think that in 2022 it'll pass. And to answer, I think, Robert, the House did pass that piece of legislation, because it was noteworthy that I think only 2 Republicans improved it, one of which was Matt Gaetz, removing it from Schedule I. The Senate, no surprise there, was not going to take any of that. But if there's a Democratic Senate and perhaps a Democratic president, even though Trump has shown interest in this as well, this could be something that happens in the next 2 years. All right, well, I don't see any other questions in the chat, and it's just Robert and I looking at each other right now. So I think we're supposed to give it over for Doug for some more. Doug, I got a request for you. In our house, I've got a 5 and 2-year-old, and I made the mistake of giving my 5-year-old, who loves jokes, a book of kid jokes. And there's like a whole section on knock-knock jokes. So I'm going to challenge you, Doug, before the day's out or tomorrow. So let's work in some good knock-knock jokes. So underrated. Those are solid. They get a good laugh, even if it's a 5-year-old.
They're good. I'll work on that tonight. How's that?
Perfect.
I got one more lawyer joke. It appears that a lawyer woke up in the hospital after surgery, and he asked the nurse, "Why are all the blinds drawn in here?" The nurse answered, "Well, there was a fire across the street, and I didn't want you to think something had gone wrong with the operation." Our next winner is number 80. 7, Deborah Rice Lamar from the Jesse Trice Community Health Center. Deborah Rice Lamar. Now it's Peter. Take it away.
Thank you, Doug. Congratulations to Deborah. And like we said, Jennifer will be reaching out to you. So we just want to say thank you to all of today's presenters. Your sessions were very informative, and we hope that everyone on the streams enjoyed them. Before we wrap for the day, we'd also like to thank a couple of other folks. First, we need to thank all of you FIT members, of course, who are in attendance today, and all the ones who were not able to make it. Without you, FIT would not exist. So a big thank you to all of you. Second, we'd like to thank all of our agent partners. You hold a very special role with FIT, and without your dedication, we would not be successful as well. We look forward to seeing everyone back here tomorrow at 10 a.m., same streaming channels that you had today, for the more sessions and even more prizes. So thank you again, and we'll see you all tomorrow.